Welcome to the Theo video for Tuesday, March 1st, 2016. I'm Jeff White, and if you are a bull, today was indeed a super Tuesday as the major averages stretched their legs throughout today's session. You know, it was like stock market yoga because there was a lot of stretching going on with all this move here to the upside throughout the day, lots of running and very little pullback type price action along the way. The gains were very steady. It was just kind of like we just ramped all day long, and it was a very impressive day as well. In addition to those steady gains, as we painted some fresh new highs across the board, and we did so in a pretty impressive fashion to the tune of 2 to 3% across the board. And so perhaps the most notable aspect of the day was really the fact that all of the averages were able to make new higher highs along the way and really take out those February 1st highs that we've been so closely watching. For the S&P, and that took place a couple of days ago, as we were able to move beyond that 1947, 1950 area. And we did see some hesitation, of course, in the last couple of days, but it was not isolated to the S&P after today, because we, of course, saw the NASDAQ follow suit, and it was able to push beyond this 46.36 high from February 1st. We've also, of course, seen the Russell starting to edge beyond its February 1st high as well, that being at 1037, and reclaiming this longer-term level that we've looked at here on this 3-year chart at 1040, which had been some key support at times in the past. And once we moved beneath it earlier this year, we've stayed under it until just the last couple of days, and today we produce some space between where current price is and where that 1040 area, as we went out at 1054. So it was kind of unanimous out there. We even saw the NDX also capable of pushing above this February 1st high. So lots of higher highs out there across the board, and really that was not unanimous until today. But after today's lift, it shows us that this current rally, well, maybe there's a little something different to it. Now we're kind of outside this range that we've been looking at, maybe a little bit more clear cut here on this SPX chart, but now we've kind of left this range, and the conversation now turns really to that of recovery. It's more of how much of this stretch can we recover, maybe to approach these highs from December, and of course back in here this November high at 2116, where we have been kind of gradually deteriorating from here over the last few months. So looking here at the intraday action, it was also like a turnaround Tuesday. So yesterday we had this action for the last several hours of the day where we just saw price gradually erode, and some steady selling pressure, pretty sour mood as the end of the day came yesterday. And this time yesterday, on the heels of kind of a trio of failures through that 1950 area, and even with this kind of low that was set at the end of the day here in the SPX, that's now a distant memory, because of course today's price action just saw an enormous turnaround and no let up really in sight. And so fresh new recovery highs here on this daily chart for the SPX. And so now that's kind of the big question: how much of this move can we recover? And really the next level to be looking at, we've got an unfilled gap here to 1990 in the SPX, now just 12 points away. That's from the close on January 6th, and that coincides with this 1993 area that we've also discussed as being an important level over the course of the past 8 months or so, 9 months. And so it's also notable, though, when we look here on an intraday basis to see the bonds, which backed off considerably, especially this morning, but even into this midday low at 162.04. Lots of pullback type price action here. So while the S&P is busy clearing 1950, and that's indeed bullish on its own, as is of course the NASDAQ, crossing that 46.36 and Russell above 1040. That's all notable. All those things are great, but I really think that the potentially bigger item of interest, no pun intended, are the bonds. And so we look here at this daily chart of bonds, and we've been discussing this a lot lately with this relationship as stocks have been moving higher off of early January, and the way that has really overlaid with the pullback in stocks. But now all of a sudden we're seeing the tide shift. We're seeing stocks turning the corner here in the short term, and bonds also turning the corner to the downside here, which is not positive for bonds, but it absolutely is positive for stocks. So we've looked at this 169.13 high, and we've seen this lower high that was created last week, and we've discussed that and how possibly that's an indication that the tide may be shifting. But we weren't too quick to write it off. We still had this rising support here until the last couple of days, in which price started to undercut it a little bit and just kind of flirting with a breakdown. And then all of a sudden, pretty decisive day today with a fresh new low, and that of course confirms this trend line break. It also confirms the lower high that's been in place since last week. And so being that this rising trend line is now broken and this new low has been created, we've got this lower high in place, and now it's a matter of how deep does the pullback in bonds go. But this is of course potentially very bullish for stocks, not just today to see bonds backing off in unison with stocks rallying, but if this retreat out of bonds continues, it's going to free up more money that's likely to gravitate into stocks. Now, the issue, I think, at the moment is that stocks are starting to get extremely extended here in the short term. Okay, the Russell today was up 2%. That's nothing to sneeze at. That's a big day. But it underperformed today, and that's very different than what we've been seeing lately. So this has been kind of leading the way off the lows. Well, today it lagged a little bit, and so that's something different. That's notable here to see small caps starting to see a little bit less of appreciation compared to the broad market. And so this particular index, though, when you look here on this daily chart, is up to the tune of 12% off this mid-February low of 943. Wow, it is hard to chase them here, even with some room between where they closed tonight, 1054, and the Russell, all the way up to this 1078 prior support level that was the 52-week low that we broke in January. So that's now just 24 points away from here, and yet we're very extended here, and not just even off these lows from 943, but even from the low of last week of 996. We've run some 58 points here off the Wednesday intraday low. If we take a look here at the S&P, just the picture here of the broad market, it's also stretched. The S&P here off this low of 1810 is up 168 points here to the upside. That's north of 9% here off this February 11th low. So a matter of less than 3 weeks here to see an appreciation in the broad market to that extent, that's a lot. But even just since last week's low, from Wednesday's low, we're up 4.6% here. And, it may be tempting when you see a trend day like this and everything seems to be running to just, jump in there and dive into, something just so you don't feel left behind. Every trader feels that pressure. But on the heels of, those kinds of moves here that we've had in just the last few days, and especially in the last 2.5 weeks here, on the heels of that, it just is quite difficult to make a case for chasing stocks here and really aggressively piling in on the long side. The better plan usually is to kind of summon your inner Larry David and curb your enthusiasm just a little bit here and try to have the patience to wait for some better pricing to come along, even if you do want to get long, even if you are convinced that this is going to be a lasting turn in stocks. There's nothing wrong with having that stance. It's just a matter of giving yourself the best opportunity for a good entry, and it's rare to be able to chase this kind of short-term strength and not, sometime soon thereafter regret it. But one way that could easily play out is through the formation of some kind of a higher low on the next pullback. Mind you, that doesn't mean that you're piling in on a 5-point pullback here the next time that you see it. What I mean is, seeing some kind of a retreat here in the coming days that lasts longer than a few hours. Something that actually maybe invites, dare I say, a little bit of doubt among market participants, and to where more people maybe start to wonder, was that it on the upside? I mean, that's probably the much better opportunity for trying to initiate some long-sided positions. So even if you are a bull, it's wise at this stage to kind of wait for the discount to come along, wait for the sale. It's going to happen, but it really comes down to, can you stand the wait? Are you able to sit on your hands in the short term and wait for some better prices to arrive, because odds are you're going to get them. Back here, this big bar, not too different than what we just saw today. This particular day was January the 29th. This was coming off of a huge rally off of 1812 in the SPX up here into the 1940 range. That's a big move. So you can remember here tonight that even just a matter of weeks ago, there were traders who chased this rally off that January low. They got maybe a little bit over anxious about being left behind to the upside. And unless they flipped out those long positions relatively quickly, they were reminded just a matter of days later that stocks do indeed go both ways. So this time, maybe it's different, but maybe it's very similar, and we do get some two-way price action like we've been seeing for much of this year. So stay patient out there, even if you are a bull. If you're a bear, well, you're getting your shot here at getting some opportunities to put on some short deltas into this move. But it's equally important, even if you're bearish, to stay patient in the face of this kind of momentum. Just because an overly aggressive entry here, even by a day or two, at the pace that we've been moving at here, if you mistime that entry even by a very small amount of time, it can still bring some considerable pain. So keep that in mind and stay patient out there. Okay, this is every bit one of those opportunities to stay small, regardless of your directional bias out there. Thanks a lot for stopping by TheoTrade, and we will see you in the chat room tomorrow. Enjoy your evening.